Hey guys, it's Crossroads here. Thanks for tuning in. Today we're looking ahead at Palantir earnings. So, earnings are on Monday after hours. We're going to talk about what I'm expecting and the moves that I'm making. Some of them I've already made as well in response to what I'm expecting for the earnings. Now, if you don't know, Palantir is my number one holding. It's my number one position that I've held buying in early 2021, all the way up to 25, $26 a share. Bought it all the way down into the high fives. Got a little bit there too. And so average position is around the 12 range. Net is about $6 range just because I've been selling covered calls against it. At some point over the next year and a half, I expect the premium will actually offset the price that I initially paid. That's always fun. But it is a massive position. It's risen up about 150%. Take a look at this chart and you'll see what I mean. So over here, you have the year-to-date chart. Let's make that a little bit bigger. And you can see that it's ridden up about 150% year-to-date. And so it's held off. It's no longer at the all-time high as it had been recently. But it's been on a massive run. And of course, it rode up a lot last year as well. And so a lot of people are trying to call the top. They're saying, hey, this is the top. It's very expensive, or they might even say that it's overvalued. My own view is yes, it's very expensive. They're not wrong on that. Price to earnings, which it's a company that's well early into the growth stage, so it's not the best measure, but it's 244, which is obscene. 118 for the forward price to earnings based on analyst estimates. And the price to sells, which maybe is a better measure here, it's 37. It's quite high. If you look at other SaaS competitors, it is above CrowdStrike. It's above many other names that have that premium. And I think the premium has been justified. The run is not just purely hype and speculation, but Palantir is an incredible company that I plan to be investing in over the next decade, maybe two, maybe three. We'll see. As long as the company is executing, as long as they continue to push out what they have been pushing out, I'm excited to be a shareholder. But that said, what about earnings? Well, let's take a look here. So analysts are expecting to have good, but not necessarily great earnings. So we can see here their analysis basically actually comes in at 9 cents for earnings estimate for EPS, and revenue is coming in at I believe it's of 701 million. There it is, right there, 701 million. And this is actually roughly in line with the guidance that Palantir put out. Palantir had published that, and they'd said, "Hey, this is the high end of our guidance." Now, I think that Palantir is going to actually beat this for a couple of reasons. So one of these is they ended up. It seemed like they always do earnings on dates that are macroeconomically significant. So last quarter, that was in the middle of the yen carry trade debacle, one of the largest drawdowns we've seen intraday in the stock market in the last couple of years. And Palantir reported right into that. Now, at the time, there were some like Jeremy Siegel that were calling for emergency rate cuts up to 75 basis points by the Fed. And of course, those weren't needed. They didn't materialize, and rates weren't cut until late September. But Palantir does make some revenue off of their $4 million balance sheet, their cash, just from the interest. And so when they were baking in that guidance, they tend to be conservative, maybe sandbag a little bit. And I think that that's what they were doing here as well with interest rates. But the bigger piece is net dollar retention. Now, if you've not heard of net dollar retention, this is a figure that's used for a lot of business to consumer type products. The definition varies from company to company, but the Palantir definition and the standard definition, frankly, is how much are companies spending on extending their contract versus the original amount that they had. So let's say they sign a deal for $10 million one year. After 12 months, what's that contract look like in the future? A lot of times they'll have that escalate over the years, and sometimes there's extensions as well. Net dollar retention, I predicted last quarter would begin to inflect up, and it did. It came in at 111%, which isn't amazing, but you can think of it as if they're trying to hit 30% year over year revenue growth, that 11% basically gives them a foundation where they just need 19% more growth from new clients on top of that because existing clients are scaling these contracts out. Now, I think net dollar retention will actually be significant this quarter. I have not predicted what that number is going to be, but probably something like 115, 116%. And the reason why I'm thinking that is Palantir came out with a whole bunch of comments on this. Let me show you this one here. This is in quarter two earnings. And the last, if you've been following Palantir, or if you've not, they used to have a whole slide dedicated to not net dollar retention. And all of a sudden, that went away a couple of years ago. It's still found, but it's a very small number in the earnings deck. And yet it received a call out here because net dollar retention was 114%. This is from David Glazer, the CFO, which is an increase of 300 basis points from last quarter. And they say it was driven by expansions of existing customers and new customers acquired in quarter two of last year, as net dollar retention does not include revenue from customers that were acquired in the past 12 months. So in other words, if somebody onboards with Palantir 6 months later, like, hey, we're using this a lot more than we expected, or we want to board on AIP as well. All of a sudden, they're signing that extension. It doesn't count as net dollar retention. It's still acceleration. But that's what's happening here. Is it says it's not been fully captured in the acceleration and velocity in our U.S. commercial business over the past year. Now, another quote for you. Let's put this here. I've got a post that I'll post on Monday. But this quote here from David Glazer as well. He says that one of the most notable indicators of our delivery is the volume of existing customers who are signing expansion deals, many of which are a direct result of AIP. We continue to see the greatest transformation in our U.S., in the U.S. commercial specifically. And so we've seen, over the last half of year, Panasonic Energy, AARP, Eaton, Kinder Morgan, Tampa General, and many others as well, not just sign deals, but actually announce it. Now, that's a little bit odd because in the past, U.S. commercial companies were a little skittish of identifying with Palantir. And now it's the opposite. They love to actually identify with Palantir. They love to announce these contract extensions. And there's been a lot of others as well that remain anonymous, but they, if these here are showing acceleration and net dollar retention, I think that we're going to see a pretty significant boost of that over the next couple of quarters. Part of that too is the way that these deals are signed. Usually it's not a infinite deal that goes out however many years and it keeps scaling. It's for, especially initially, just a couple of years. And as that product scales and as they get near the end of that cycle, Palantir has a very sticky contract. And so a lot of those deals that were signed 2 and 3 years ago, they're coming up to the point where the product has gotten a lot better. They're using it a lot more, and they're signing these extensions. And so we'll see that accelerate. Now, what this means is I believe that we'll see a 30% year over year revenue growth of $725 million. It's about $24 million in the average analyst expectation, bringing earnings per share to 10 cents per share. Now, that still would put their PE and price to sales at just astronomical. But again, I'm not looking at this company just to see what I get out of it over the next 6 months or year. I know I have a very good idea of where I think Palantir is going over the next decade, what they're capable of delivering, what they've already showed as well, and that TAM that they're actually able to realize because of the bootcamp strategy and specifically AIP. So customer count is another important indicator for this company. And customer count, let me pop this up here. Customer count continues to grow, especially in U.S. commercial. And what we see here is that that has been continued to the case, 41% year over year for customer count. Of course, you can see commercial growing much faster, although government has been doing some good things here recently. I think that they'll put in about basically the average over the last 3 quarters. I haven't seen any indication to think otherwise. That'll put them around 645 customers, about a 9% sequential growth. That's a very good number, very strong number. But the question is, if Palantir is still, it's growing 30% year over year, that's fantastic, but it's still not a cheap stock. So what am I doing with Palantir? Well, first, what I've already done, I initially, when I built out my Palantir contract, I bought a number of leaps. Those are long-term options contracts that I bought at the $10 strike. Now, many of these I sold last year as Palantir rode up, and then I had just 2, actually, a very small amount that I bought for $160 total that I made an obscene amount. I think they were 25x on the returns, something around there. I've sold both of those. I initially planned when I bought those just to go ahead and exercise them, add to my other shares. It's not a large amount for me, but it's a nice increase. And I wanted to bank some gains early on rather than exercise these at the $40 to $45 strike. Now, if Palantir falls back down into the 30s, low 30s, I'll probably just go ahead and buy those shares with the money that I sold them at, just because I, again, see where this company is headed over the next decade, even if we have dead money for a little bit as the valuation, as a company catches up to its valuation. And again, that may not be the case. We might see that the market gets really excited about this, justifiably so, and it continue to go up above and beyond my expectations. Now, as far as the rest of my shares, that's still somewhere around 50% of my overall position, though I do have some growth catching up from some fintechs. But I just plan to hold those. I went ahead and sold some $55 covered call strikes last week when the premiums were much higher. And on Monday, I'll just have to see where we open up on the market. If we open up with a nice green spike, I'll probably sell more around that strike, maybe a little bit lower, not for real high premiums. I just want to be very, very careful because the market has been excited about this name. I'm selling covered calls to get a little extra premium, not to actually exit that position. I don't particularly like rolling. And so that's just where I'm at. Is I'm just happy to basically sit on my hands with this, not sell any cash secret puts, not buy more stock. I've already sold my leaps and banked those gains. And the rest of it, I can just let ride off into the sunset over the next 10, 20 years as Alex Karp and his team just dominate this industry. So where are you? If you hold Palantir, what are you doing with your shares? Are you buying more here? Are you selling covered calls against it? Are you taking some off the table? It's not wrong to take gains, by the way. You need to figure out what's right for you. So don't feel bad about either buying or selling here. But as always, thank you for watching, and I hope you have happy investing.